Well, Adrian Foster is head of financial markets research, Asia Pacific at Rabobank International. He's with me now. We, of course, head towards that Chinese Open as well. And it's a lot of people are just looking to China for 2012 to see whether it can actually lift the gloom in the rest of the world. What do you think?
I think on its own it's unlikely to. Of course, it's still not the heavyweight player in the economy, in the global economy, as important as it is, of course. I guess it's going to be one piece in the puzzle. And I think, as I look at it, the economy's already lost momentum. In fact, it lost momentum a few months ago. It's growing at about the 8.5% range.
That's phenomenal, though, isn't it?
Well, it's still pretty decent. Of course, it's down from the 10 to 11% growth rates, which perhaps we've become accustomed to, which can give some real boost to the regional momentum. But I think about 8.5, it continues to provide some momentum to the regional economy, to the Asia-Pacific regional economy. It's going to be a positive contributor to global growth, perhaps not quite the degree of momentum that people became accustomed to for the last couple of years.
What about the authorities there? They can manage it pretty well. They've got a lot of bullets, if you like, left in the gun when it comes to perhaps easing monetary policy.
Yeah, well, I think that's actually a big part of the Asia-Pacific story and extends down to Australia as well, of course. Through the last year or two, central banks around the region have been tightening policy. Fiscal policy, by and large, has been tightened, perhaps not as aggressively as it could in some cases, but a degree of tightening has gone on there. If indeed worse fears are realised around the major economies in Europe and US, then it does give some bullets, as you say, some easing bullets around the region. I think that's a factor which we can bank on, I think, to provide some momentum, indeed, if these worst global fears are realised.
I was talking to Andy Rothman yesterday from CLSA. He was saying to us that well, you know, the triple R, we can have the triple R cut there, the reserve requirement, but he says it doesn't really make a material difference. How do you respond to that?
Yeah, I actually see the triple R as just being prudent management of the liquidity picture across China. Of course, it's in a way it's a mirror image of the FX reserves, which of course the central bank has to sterilise. They do that partly through the triple R. So I don't see it as a main macro driver, if you like. But of course, the benchmark interest rates were hiked 4 or 5 times through the last year and a half or so. But there's some scope there to ease monetary policy in a very conventional sense.
So when do they actually start cutting interest rates proper?
I think at the moment it's an insurance option. I'm not looking for a rate cut. I think they're on hold. But that's based on the idea that the US continues growing at about the 2.5% rate through next year.
Which PIMCO doesn't think it's going to be 1%. They say it's going to stagnate.
Yeah, I'm not sure their view, but there is this view that there's a stall speed growth rate, which, to be honest, I think when we bring physics into economics, we can make some mistakes. This stall speed idea, of course, is more related to aircraft than to economies. We've seen the US economy grow at around about that 1.5 to 2% growth rate for a good few quarters now. It hasn't stalled, and I don't think stall speed is the right way to look at it.
Let's take a look at Japan. Do we get more of the same, sort of just muddling through?
Yep. I think we've had 2 lost decades in Japan. We've had a reasonable rebound out of the deep recession of a couple of years ago. Of course, we've had the earthquake interrupting events there. We've seen a decent rebound after that, but I think that momentum is already
waning. Well, I put it to you, actually, Adrian. If you look at the Japanese economy in dollar terms, it's one of the fastest growing ones in the world.
Helped along by some currency appreciation as well, of course, yeah. And if you look at the export, the trade accounts of Japan, in fact, in the unusual situation of late, it is providing net stimulus to the global economy because exports are still encumbered by the earthquake damage, the strong yen and indeed weak global demand. Imports are rising at about the 11 to 12% year-on-year rate. So there is a bit of net stimulus to the global economy coming from Japan. The bigger picture there, though, with demographics against the economy, I think once this sort of earthquake rebuild passes, we're back to that sort of sub-1% growth trend.
And yen remains strong, does it, for the foreseeable?
We've got it remaining strong until US interest rates go up as the main cyclical driver of the dollar-yen exchange rate, and that's really a story for 2013, 2014. Right,
and just generally speaking, for the Southeast Asian economies, you know, more reliance on China, isn't there?
Oh, sure. I actually view China as... There's, of course, a view that China is a fierce competitor of Southeast Asian economies, and it is in many regards, but it's also a very important boost to the opportunities that those economies face. Just on a very simple level, Chinese tourism is, of course, a big and rising picture around the Asia region. There's stimulus for those economies. So I think net-net, China provides a boost to these economies.
Adrian, have a fantastic Christmas. Adrian Foster there from Rabobank.